Hello traders. If you're still feeling unclear about your trading approach and don't yet have a well-defined strategy, then this video is for you. In this video, we'll discuss how to build your own edge in the market and develop a strategy with a real, measurable advantage, instead of trading based on emotions or guesswork. Let me give you a simple example from this video. As the market moves the way you see here, at the marked area on the chart, ask yourself one question. Would you buy or sell at this point? In reality, when traders lack a clear trading plan, most decisions are driven by emotion rather than structure. And that's exactly what leads to poor judgment and unnecessary losses, even when the market itself is behaving logically. So how do we improve this situation? What I want to focus on here is your trading edge, the core element that allows you to make clearer, more structured, and more consistent trading decisions. We understand the challenges traders commonly face. That's why we built the UTF course to explain what a trading edge actually is. The course is available at no cost. Now, let's take a closer look at what components make up a real trading edge and why they matter. To determine whether your strategy truly has an edge, place it into the trading edge equation, where E, positive expectancy, represents the overall trading edge, the strategy's ability to generate positive results over time. C, context, defines the market environment, helping you decide whether a trade should exist at all. S, signal, answers when a trade is triggered. M, management, covers risk and trade management, which ultimately determines the final outcome. In this discussion, our focus is on evaluating and building a strategy with real edge, so we'll concentrate on C, context, specifically. T, trend, the market direction. Z, zone, key price areas. And finally, S, signal, which activates the trade once all conditions align. When you have all three core elements, trend, zone, and signal, properly defined, you're fully prepared to build a trading strategy with a genuine, repeatable edge, rather than relying on intuition or guesswork. Now, I'm going to move into a step-by-step guide, so you can follow along clearly and apply it directly to your own strategy. Step 1. Identifying trend. To identify the trend in this video, I'm using an indicator called Super Trend Pro. The Super Trend Pro indicator helps you clearly identify when the market is in an uptrend or a downtrend. When the trend plot is moving upward, the market is considered to be in an uptrend. If a candle then closes below the trend plot line, the indicator signals that the uptrend has ended and the market may be transitioning into a downtrend. Conversely, when the trend plot is moving downward, the market is in a downtrend. If price closes above the trend plot, the indicator suggests that a new uptrend may be forming. Using this logic, we can clearly determine the current market trend, which serves as a foundation for building the rest of the strategy. Next, we move on to step 2, identifying zone. To identify trading zones in this video, I'm using an indicator called Volutank Army. Now let's look at how Volutank Army forms supply and demand zones. Assume the market was previously in a downtrend. At a certain point, the last bearish candle appears with a sudden spike in volume. Immediately after that, the market responds with a strong bullish candle accompanied by high volume, indicating a shift in control from sellers to buyers. This is what we call a power shift. At this location, Volutank Army automatically identifies and calculates the price zone, then plots the corresponding supply or demand zone. Beyond drawing the zone itself, the indicator also displays detailed information about total buy and sell volume, showing which side holds dominance within that zone. This allows traders to assess the strength and reliability of each supply or demand zone before making trading decisions. As shown in the video, the indicator automatically calculates and plots supply and demand zones with clarity and precision. When price revisits these value zones, the market often reacts accordingly, confirming that these are high-confidence areas. These reactions help strengthen your trading edge, allowing you to understand not only where to trade, but also why those zones are worth trading. Next, we move on to step 3, identifying signal, where we combine trend and key zones to determine the optimal trade timing. To obtain a reliable trading signal, 3 core conditions must align. First, trend sets the trading direction. Second, zone defines where to wait. Finally, signal determines when to act. When all 3 elements align, the setup offers a higher probability trade with a clearer edge. To identify entry signals in this video, I'm using an indicator called omni-spectrum scan. With this indicator, there are many ways to define entry signal conditions, allowing you to tailor them to your trading style. This is the component panel, where you can customize the criteria so the indicator searches for signals based on your specific requirements. One important thing to note, the stricter the conditions, the fewer signals you'll get, but with higher filtering quality. On the other hand, looser conditions will generate more signals, which may require additional confirmation to maintain accuracy. After completing the setup, I'll demonstrate how to trade using this strategy in real market conditions. First, Supertrend identifies an uptrend. Then Volutank Army calculates and forms valid value zones within that bullish trend. Finally, when Omni-Spectrum Scan detects an buy entry signal inside the value zone, that becomes the execution point based on the trading edge we've built. In a downtrend scenario, the trading process follows the same structure but in the opposite direction. When Supertrend confirms a bearish trend, our focus shifts to sell opportunities instead of buys. Next, Volutank Army calculates and plots valid supply zones within the downtrend where price is likely to react. Finally, when Omni-Spectrum Scan generates a sell signal inside that value zone, it becomes the execution point aligned with the trend structure and established trading edge. Once you've defined the key conditions that form your trading edge, the next step is to execute consistently. Maintain discipline, and always prioritize backtesting before applying any strategy to live trading. We'll continue sharing more videos on trade management, helping you optimize execution and manage risk more effectively. Thank you for watching, and see you in the next videos.
Join the NINZaFamily forum to stay connected, ask questions, and explore ideas with our team and other traders. There's a lot more waiting for you inside. Links in the description. Thanks for watching until the end. If you found this video helpful, don't forget to hit the like button, subscribe to our channel, and ring the bell icon so you don't miss our latest content.